Everyone is talking about the Trump tariffs and the trade war between us and China. And there most certainly is a trade war. It's been underway, and it's certainly getting more and more focus. But there's also something else at play that hasn't really been talked about, and that is the rise of China and the threat that China places upon our petrodollar, or the dollar itself, as the reserve currency. I'm showing you a picture of a sand dollar, and I'm going to use the sand dollar as a metaphor for where we have been, what we have done as a country, and where we are. In 1973, Nixon took the dollar off of the gold standard. In 1973, $35 would buy 1 ounce of gold. Now, to play along with me, let's assume for a moment that you owned Sanibel Island off of beautiful Fort Myers, that you owned the whole thing. And if you've been to Sanibel, the beaches are covered with sand dollars, and there's tons and tons of sand dollars out in the oceans. Now let's just pretend for a moment that that is the only place in the world where you could get sand dollars. And to bring out this metaphor even more, let's assume that in 1973, your sand dollars that you had and you controlled would buy 35 sand dollars would buy an ounce of gold. Now let's say that your advisors at the time said, you know, in the next 50 years, there's going to be a huge industrialization of a lot of these other economies, and especially China. When China comes out of the dark ages and embraces, if not democracy, at least a state-run democracy. How do we want to position ourselves to control that, to share in that wealth, and have things go our way? Well, what Nixon did was to take the dollar off of the gold standard. But it was a two-part move, or a multi-part move. He then went to the Mideast countries that controlled the most valuable asset, the most valuable commodity to any economy that would want to join us in the industrialization of their economy, and that would be oil. From running their motorbikes to their cars to nylons to toothpaste to everything, you need oil. And so what Nixon said was to the Middle Eastern countries, he said, we're going to have a global economy. And these countries are going to be coming to you for oil. We're going to make a deal. We're going to protect you, protect your resources, protect your family's wealth over the next years, provided that all the oil you sell is transacted in what? Dollars. Or sand dollars. Sand dollars. And that's what we did. So as all these other countries, including China, have come online, we have reaped huge benefits because all of the oil for the last 50, 60 years has been transacted in what? Sand dollars. In fact, you ran out of sand dollars on Sanibel and you started to counterfeit them, and you turned them into plastic and credit and empty promises that one day you'll give them sand dollars. But you were reaping huge rewards even though you weren't selling the oil. You were providing the currency to transact in oil, and you benefited. Now it's 2018, and China has learned the game. And China now, like Iraq tried, I don't know if you realize this or not, but Iraq tried to transact in oil or transact in oil in another currency, namely euro. And we went to war with Iraq and we ousted them. And Iraq now transacts their oil in dollars or back into sand dollars. You might say that's probably part of the reason why a lot of people probably don't, pay much for their defense is that, we do reap that reward. So now China, as they've learned how the game is played, they want to transact oil directly with oil producing countries like Russia or the Mideast and say, hey, why do we want to transact in your sand dollars? We want to transact in yuan. Well, that's a problem. Because if China takes the lead and wants their currency to be the reserve currency, or other countries say, hey, we don't have to transact our oil transactions in sand dollars, we can use our own currency. Well, what do you think is going to happen? Well, think about this. Your sand dollars, in 1973, 35 of them would have bought an ounce of gold. You proliferated all those sand dollars for all these transactions and all this debt and reaped huge rewards. But it takes close to, right now, tell you exactly, it takes 1,335 of these sand dollars to buy an ounce of gold. But what happens if nobody needs your sand dollars and they start sending them back? They send back all the sand dollars that you harvested and all the sand dollars that you counterfeited. They send them back to Sanibel. Now, you've been promising all of your constituents around the U.S. with their pensions and public pensions, you've been promising them all sorts of benefits and pension benefits, based on the value of your sand dollars as they are now. If all of those sand dollars came back to you, what do you think the sand dollars would be worth? Do you think 35 of them would buy an ounce of gold? Do you think 1,400 of them would buy an ounce of gold? Maybe it would be like 5,000 of them. Maybe 10,000 of them. Maybe like Bitcoin, 20,000 sand dollars for an ounce of gold. What do you think it would cost to buy a car, buy a house, retire, healthcare? What do you think it would cost? You see, folks, we got a problem. We got a problem. And China knows it. That's why the little Chinese have been building those islands in the Straits of Malacca in the South Pacific. Because see, in our history, one time we got into a trade war with Japan. And we ultimately tried to embargo Japan. Did you know that? Yep. In fact, in large part, it's part of the reason why they attacked us in Pearl Harbor. Trade wars can become hot wars. Don't lose sight of the fact of what we have done to our own dollar and where it's headed. The time might come when a sand dollar might have more value than the piece of paper in your wallet. I'm Bagadon, stockmarketcaddy.com.